Good evening. Thank you for joining us for Young Professional Network Program Series, Meet the Leaders of Venture Capital. My name is Jamie Ju. I'm the Development Program Associate at the Korea Society. Since 2011, the Korea Society's Young Professional Network has provided young adults a wide platform to connect with other professionals, develop their career by hearing from industry experts, and grow their interest in Korea and U.S.-Korea relations. Over the past decade, the program has invited speakers from diverse professional backgrounds to share their career and life experience. Tonight, we are excited to present another YPN series, which was made possible by the continued support of Yang Won-sun Foundation. Anyone interested in joining the Korea Society to support us, we are always open for membership. For the month of December, we are providing a Sarwasu skincare kit and chance to win a Samsung projector to all new and renewed members. For further information, please refer to the booklet by each of your chairs or always feel free to ask me. Now, I would like to introduce tonight's panelists and moderator, Bernard Moon, John Nahm, and Eddie Lee. Bernard is co-founder and partner at SparkLabs Group, which is a network of acceleration and venture capital funds that has invested in over 400 companies across the 6 continents since 2013. Previously, he was the managing director at the Lunsford Group, which is a private investment firm with holdings in real estate, healthcare, and other industries. He serves on the advisory board to Seoul National University Graduate School of Data Science and Nanyang Technology University's Echo Labs. John is a co-founder and managing partner of Strong Ventures, where he focused on consumer, fintech, and digital media investment both in Korea and North America. Prior to Strong Ventures, John co-founded PhoneBytes, an award-winning internet telephony startup serving dozens of schools, nonprofits, and community groups in North America. His experience also includes working in the finance as a vice president of international banking at U.S. Bank and as assistant vice president of international trade finance at Comerica Bank. John's passion for tech, global finance, and international relations grows early in his professional life while working in IT management at the United Nations in New York and while obtaining his Bachelor of Art in Economics and Master of International Affairs from the Columbia University. And tonight's moderator, Eddie Lee, is a partner at Y-Star Capital, a global multi-stage technology investment firm based in New York. He partners with the founders across the Web3, SaaS, fintech, gaming, mobility, and digital health. Eddie started his career with the JP Morgan in the private equity groups and later held an international strategy role for the Big Data and Business Intelligence Group. In between his college year, he enlisted and served in the Republic of Korea Army, where he was part of the Strategy and Operation Command and was deployed to Haiti with a UN peacekeeping operation. Eddie double majored in information system and advertising at Syracuse University and received his MBA from Columbia Business School. Now, without further ado, please join me in welcome Bernard, John, and Eddie.
Thank you. Bernard, John, it's a pleasure to be sharing the stage with you today. Thank you for being here.
Yeah, thank you.
Thanks for inviting us.
moderating.
Of course. I feel like all 3 of us got a very long bio on each of our career paths, so I'll make this a very short and brief version. Could you tell us a little bit more about your firm in your own words? Bernard, if you would like to go first.
Yeah, the way we described is actually somewhat what Jamie said is we're a network of startup accelerators. Our stronghold definitely is Asia. I would say generally we're considered the leading startup accelerator in Asia. We have a strong base in South Korea, Taiwan, and Australia. And then presence in Singapore, Hong Kong, and we'll continue to expand that network also outside of Asia. Prior to COVID, we were looking into Europe, but we put that on pause because of COVID. And then we have just traditional venture capital funds on the other side, a seed fund that invests in the US and Korea. We have a Series A fund in South Korea. And then recently, we actually just are launching a mid-stage VC fund for South Korean startups with Hanwha, who asset management that decided to be our anchor investor. So there's a lot of things that are happening now since COVID has opened. Things are back to becoming more open. And then I'm in charge, out of the core partners and co-founders, I'm in charge of our expansion. So now we're looking at the Middle East for some of our next growth. So
Great, thank you. John?
Yep. So Strong Ventures, we just celebrated our 10th anniversary, and who we are sort of was a evolution, because initially we were just whatever, let's invest in whatever opportunities that are in front of us. So kind of our identity has become crystallized through time. And what we've found ourselves doing now is backing early backing a lot of companies that will become the category leaders of tomorrow, especially in the South Korean market. And then outside of Korea, we're also doing a lot of investments trying to support and help Korean entrepreneurs, obviously because we have presence here in North America, but we've started supporting Korean entrepreneurs globally now. So we just recently made, during the COVID, our first investment in Africa, first investment in Europe, in Germany, all Korean, Korean African, Korean German, and then just made our first investment in a Korean Indonesian startup. So we're trying to be that early first seed support VC to entrepreneurs in the motherland of Korea and outside of Korea.
Incredible. Thank you.
Yeah.
It sounds like both of you are very active on a global stage, and you guys are doing many different things. How do you singularly define success for your firm?
Well, I don't think there's like one way to sort of cut it. I mean, we define it since our sort of founding is, there's metrics obviously that we have to adhere to in terms of satisfying our LPs, investors in our funds, right? So it's the return that we provide, but also we definitely, I would say, are very conscious of our branding, right, and reputation. We found that out early on, especially because we do accelerators, which are very hands-on, and our graduates on our accelerator programs have become our best evangelists, right? So that's how I think we've grown our reputation and network. And after, when we launched end of 2012, there were already like 20 accelerators in South Korea. Like, Korea is a very mature startup ecosystem compared to most of the world. And it took about 2 years, but then I would say we became the leading accelerator there. Generally, we don't get first look of every hot startup in South Korea just because it is a very active market. But we do have a lot of the top ones coming to us first now, and it's because the reputation that we built with our founders that we actually help out. I mean, every VC firm says, "Oh, we help out our founders," but we think we really do. So,
Great.
Yeah, I would agree that there's many ways of skinning what success is, right? But and in a very similar fashion for us, if we could define it, is taking a founder from the moment we invest. In many cases, we are the first check to many of these startups. We do invest also in startups that come out from accelerators like SparkLabs in Korea. We also kind of partially run together another accelerator called Primer in Korea. And so for us, success is helping this entrepreneur in many situations. We even help them incorporate the company, and taking that founder from conception of the company to in many cases, we consider our investment even pre-seed, not even seed, helping them get that seed check after us, then getting the Series A, Series B, not sure, sometimes Series C and above, and then all the way to that aspired outcome, which is the exit, both for the entrepreneur and us as investors. So, getting them to ideally an IPO, but if not, an acquisition. And we're lucky to have seen several of our founders now going through that life cycle. So for us, one of our greatest pleasures is to see that life cycle completion from conception to exit. Yeah.
Got it.
Yeah.
Thank you very much. For the next 2 or 3 questions, I've prepared a bullet to shed a bit more light on your pathway into venture capital as an industry for the audience today. I would like to start off by asking what part of your professional experience in your past life seemed most important to you for you to discover this pathway into venture capital, to become a venture capital investor, and to make you a successful one at that? This question applies to both of you.
Yeah. Right.
You want me to go? Okay. I mean, I think it was definitely as a co-founder of 4 startups, mainly failed, right? Because you learn from your failures, but also your successes, and you're able to just sort of tell that story. And that's something that actually one of my co-founders for SparkLabs, Jimmy Kim, he was also my co-founder of my first 2 startups. And so from our late 20s, we always gave free advice to other entrepreneurs. We're like, oh, you guys should avoid this. Don't do this, right? And so we feel like now, as on the VC side, we're doing the same thing we always did, but now we're just adding a check to it, right? We're just giving our stories, our war stories, and things that we learned, the mistakes that we went through, and also the things that we learned that worked. And we just add like a $100K check on the accelerator side, or it might be $1 million or a few million from our VC fund side. So definitely, I think, the most practical experience is obviously being a founder. And that's been the trend, I think, in the industry, whether it's on the founder side or just being part of an early founding team of a startup. I think that's very valuable.
Yeah. So my background is not the ideal background that I espouse for somebody who aspires to be a VC. In the sense that if I could do it all over again, I would actually go, and this is actually, there's a few VCs that promote this thinking, and I sort of embraced it, and I give this advice to anybody who's aspiring to be a VC, and it's to be a good VC, I think you should be a VC from day one instead of trying other and the one of the biggest proponents of this is Jeremy Liu from Lightspeed Ventures, and so he was saying that that to tell somebody who wants to be a VC to become a good VC, you have to operate a startup first, or you have to have a lot of experience in a big tech company. So he's a bit extreme, but he says that that's like telling somebody who wants to become a boxer that in order to be a good boxer, you need to play soccer first and baseball before you become a boxer, when the real good advice should be, in order to be a good boxer, you should start boxing from day one and get good at it. So while, I mean, Bernard's experience also is not, like straight VC, neither is mine, neither is yours. But for people who are aspiring to be VCs from early on, I really recommend, just from the recent experiences, to become VC early on. One of our hires during COVID, we hired as an analyst, and he's becoming, we had to promote him fast because he's becoming such a sharp VC. He's already sharper than all of us, and so it's been great to see that growth. But having said that, that's the ideal path in these days, in my opinion. But some people might argue that it's not the case. In my case, I started, they gave the whole profile, but I started here at the UN, and in the case of the UN, it helped me gain this global perspective. So I think that was useful. I had startup experience in Silicon Valley, and that gave me the whole startup experience and perspective. I did banking a little bit, and that also gave me a lot of help when it comes to understanding financial statements and so on. But most of the learning in VC, I think, has been in actual VC, like looking at cap tables, dealing with the founders. And most of our work these days is not so much from my expertise, but cross-pollinating from what I learned from this founder and telling the other founder, and what I learned from other investors and other LP investors who invest in us. I'm realizing that, it's like by being a VC more and more, I get better at this. Yeah.
Okay.
Yeah.
Very interesting. Two different takes on what kind of experiences build a very good VC at a mid-career point, early career point. John, it sounds like you think a lot about the core skill sets of a VC being able to collect information, synthesize information, cross-pollinate that information, as you said. Are there any other skill sets that you think are absolutely critical to being a VC?
Well, I think, this is like a negative positive. I think you have to have ADHD. Because good entrepreneurs can dive deep and focus, but I think good VCs need to be able to, focus for a little bit, but then cut off and then move to the next startup and so on. So, yeah, and I have ADD for sure, and so I don't know. Maybe I'm extreme. I think you have to have the ability to not be too involved in the problems or successes of one startup, because then you might get too sucked into that, and then also, and most basically good people skills, because you're dealing with people the whole time. I mean, we are meeting, I don't know how many founders in a single week. So yeah, people skills definitely.
I can certainly relate to every bit of that. For you, Bernard, it seems like you think a lot about your pathway as a repeat founder yourself, and how that lays in the empathy, the foundation of empathy for other founders that you interact with now as an investor. Is that the primary skill set that you encourage the rest of your team to develop as well? Is there something else?
No, I think everyone has a different path, right? So I'm not married in a sense of like, oh, it has to be this way or that way, right? Because also everyone on our team also has different strengths, right? So some might have a deep dive expertise in certain areas, like my co-founder Hanju. He sold already one company for 500 million. He's on his way to his actually like $1 billion company. He's very deep in cloud, and immediately we always tap his expertise on enterprise software or cloud. There's other people that are, might have sort of a wider sort of generalist view on different markets. Some are, just pure more engineers and a deep dive into the product. They might lack a little, generalizing, they might lack a little people skills, right? So we don't always put that person in front of founders, right? Because sometimes certain styles could rub people, the wrong way. So I think I would say definitely for most VC funds you'll see, I mean, there was the past couple of years this talk of, solo capitalists, and this trend of, I think those are anomalies, like Elad Gil, Josh Buckley. I think the most successful VCs are like most successful startups. It's a good team, right? And you have to have that sort of right balance. So,
incredible. Taking a step back, I do have to acknowledge that the startup ecosystem and the venture capital industry as well has been going through a lot of different changes and evolution, especially since COVID. The remote work and everything else that happened in between really seemed like seismic shifts, at least to me personally. how do you guys think about what has changed, what is changing with the VC landscape today? Does that influence the way the future generation of professionals, young professionals looking to enter the industry, should they be thinking about the industry slightly differently from perhaps us and everyone else who entered 5 years ago, 10 years ago, 20 years ago? John, would you like to start?
I mean, that wasn't part of these questions that I prepared. Or
Oh,
maybe-
sorry. Maybe Bernardo, if you want to go
No,
first.
no, no. Yeah, let me think. Yeah.
Well, I mean, I think if you're young in the industry, then, it might be sort of easy to, follow or adhere to, certain trends that are stated, et cetera. But, if you remember even early on in COVID, everyone's like, oh, 80% of CEOs surveyed in this McKinsey report said that, it's going to be all remote work, right? And then like a year and a half later, those same CEOs are, surveyed and they're like, okay, only 30% said it'll be all remote work. So I think the jury's still out in terms of, I would say, even like work trends right now. Because even in Silicon Valley, I would say the past 2-3 months, now a fair amount of companies have required at least going to the office like 3 times a week, right? And then it's also just, I remember even first 6 months in COVID, talking with our portfolio, some of our portfolio companies, like especially the sales execs, they would be like, oh, COVID's awesome. I do like 20 Zoom meetings a day. It's super efficient, right? And I talk to them here and they're like, COVID sucks. They're like, I can't close. I get to the 90%. And, some sales in some industries you could close all remote. But I think a fair amount of them, they found out they couldn't close that last part until they meet in person. So I think there was initial sort of swings and trends that people saw, but I'm just waiting and seeing how things really settle. So,
Well, if I can point out to the difference in COVID, at least from our network of companies, startups that we deal with, and also our LP investors, and maybe where we are in our own life as a VC fund. COVID was the busiest in our limited short history, and especially because most of my team is based in Korea, and Korea was much more careful with COVID than we were here in the U.S. So the moment the numbers would go up, everybody would go to Zoom meetings, no in-person meetings. And or if they met, they would be masked on, and so during COVID, yes, there was a time when every meeting was through Zoom, and I think, because of we were doing all the meetings through Zoom, then we didn't waste time in the water cooler or going from one place to the other or commuting, and that created speed of like communication between us and our LPs, us and our startups. So during COVID, in our case, so during if we count 2020 March until 2022 March, we did more investments in those 2 years than in our previous 8 years. And that's because we kept bouncing the ball back with our LPs so fast, and like there's no time to relax and take out time, discuss things at the water cooler, at the restaurant, in the coffee shop. Everything's bounced right back. So and so all the deals, both on the fundraising side and on the funding side, because there was no need to meet in person, there was no need to, and that was dangerous too for the due diligence aspect as well. But things became, in theory, so much more efficient that we were doing a lot more deals than during like regular non-COVID times. And so I'm glad that we can take a breather now and go to the bathroom, go like to the water cooler, discuss these opportunities, have lunch together, have go visit each other's offices. I think this is very healthy, both for us reviewing these companies and, from we are doing fundraising, as you know, all the time with our own investors, and having that interaction, I think, is very important. So I'm glad that we are back in post-COVID and we can meet each other and interact. Yeah.
But I think some of that function is not just because of COVID. I think it was just the markets, right? Because it was just so crazy, deals getting done.
Yeah, that's true. The
So-
money is flowing. Yeah.
Yeah, it wasn't just the money flowing. It was like the markets. And then you have what people in Silicon Valley call like tourist VCs, like hedge funds like Tiger and, SoftBank, which is essentially a PE fund, all of them going downstream and being part of like late stage investments, right? And the only way they could, win the deals, I'm sure you guys read about it and know about it, but everyone in Silicon Valley saw this like 9 years ago, 10 years ago also, where, Tiger would come in aggressively. I mean, they were really aggressive during that time, then steadily, and then they became really aggressive the past couple of years. And the only way they beat, the Sequoias of the world, the IVPs, is basically they overpay, like 2 to 5x, right? So they get these deals done really quick. They'd overpay, and seed Series A investors like us, we saw this updraft on, last year. There were these like crazy like deals that normally most let's say seed deals, it might be 5 to like 15 million, like especially your YC company. Then all of a sudden it was like 20 to 50 million pre, and then we did a couple of these deals just because we backed the founder that we already knew. But normally we would not do these deals because they're just totally irrational. And now it's back to normal, where I think it's like rationality has come in, the tourist VCs have left, and at least you see normal valuations. And I think it wasn't just COVID, it was a function of the markets too.
I absolutely agree with that.
True.
Absolutely agree.
Yeah.
And that's a great segue, actually, to move into a slightly different section to cover topics on investments, actually. And Bernard, it's a great point to talk about how in a different market environment, different investors will have varying degrees of risk appetite. They will price rounds differently. They will assess companies differently. For you and your team, how do you guys approach due diligence in general? If you could give us a quick summary.
Yeah, I mean, it's like standard, like I would say most seed Series A investors. Series A, you have more time, right? Seed deals in Silicon Valley or even in Korea, like Silicon Valley, sometimes they close in like 2-3 weeks. So you have very little time. In Korea, I think it might sometimes take longer. It might be like a month or so if it's a hot deal. But generally, you look at the 3 big categories everyone says, like team, market, and product, right? And if it's a seed deal, it's harder and it's a soft skill, but we dive more into the founders and the team dynamics, right? Because I would say about a third of startup failure really is this chemistry among the founders and founding team. Do they have the right balance? Do they have ego issues? Is something going to come up? Trust breaks down. Like that's what you see all the time, right? In startups, it's never the technology, it's never the product, not never, but a fair amount of times it's just the team dynamics or something happens. So that's what we try to assess, but that's also the hardest thing. But we've early on in our founding, we learned not to get enamored by technology and somehow just really dive into the personalities and the background and reference checks. So.
Anything else you do to assess that team fit before you make the investment decision? Do you take them out to dinner? Do you try to meet their family members?
No, I mean, it depends. If we're in the same city, we'll have multiple partners meet them because everyone has sort of different personalities too. And that's a good thing, is that when you have a team and an IC, it depends on the fund, but an IC might be made up of, 3 to 5 partners. We have them like at least call, meet them, get to know them, or talk to all the different founders on the team. So
makes sense. Great. How about you, John?
Yeah, I would agree that especially in the early stages that we invest in, it's mostly about the team, and so we make sure that everybody in our team, and it's our investment team is 6 people, so everybody in our investment team meets the founder. Maybe it's 2 first, 4 later, or 3 first, and then 3 later. So, or 2. So we take turns meeting the founder so we can gain different perspective from the founder or founding team. And a few of the things we try to assess, foundationally, we need good character, right? Like we want to make sure that this person is honest, it's good ethics. So good character is a given. And then there are three aspects that we're looking for in a founder or founding team. Is one is can this founder execute? And for that, we look at previous experiences, track record so far, traction so far. Also, we look for other traits that we look for is can this founder or founding team hire well? Because as they grow, they will need to hire smarter people than themselves, right? So, and we can see that a little bit through the composition of the early founding team, the early employees, who they are. And then another aspect that we look at is can this founder or founding team fundraise well? Because it's not, our check is not going to be enough for this company. They'll need to raise another, a bigger seed round or Series A, Series B, and so on. And can they foment the environment that causes investors to battle for their deal to invest in that company? Can they create that fundraising environment? And for that, we look at the current fundraising dynamic that's happening where we are part of, and do we feel kind of drawn to this deal because there's so many other funds that are competing for this deal. There's how she or he talks about the other investors. Does this founder take care of her or his early investors well? And then increasingly also what we're looking at is the cap table. The cap table is sort of the shareholder list, and for very early stage startups, it should be very simple. It should be the founders and maybe a few angels. But you would be surprised. There's many early stage startups that have very complicated cap tables with advisors who are owning 10, 20%. And that's, as it's a no-no for us because we know that at Series A, it's going to be a problem because these later investors are paying millions of dollars to get, 5% of the company, yet this advisor who's not doing much is holding so much of the company. So cap table is very, very important to us these days, even more. But I'm curious, because Eddie invests typically a little later stage than either of us. How do you look at startups?
I did not prepare an answer for this, but thank you for asking the question regardless. We really look for founders who have that aptitude to build a team that really can scale on its own. And a slightly different way we think about it is, how do the founders or co-founders effectively construct a culture of excellence? How do they develop that culture of success? And are there proof points of that culture that we can already see across the organization outside of the co-founders? So we try to speak with some of the other members on the executive team. We try to speak with more junior level employees too. And we try to see if there's a level of consistency between how the founders communicate about what makes their team excellent, what type of culture that they aspire for, and whether or not that translates to how employees think about their team too.
So for you also, it's about the team, even at later stage? Well,
and a little bit more Excel, that's unnecessary.
Okay.
And I love the fact that we both, all three of us, have talked a lot about team. Maybe to shed a little bit more light on your respective experiences, would love to hear about a decision you've made, an assessment you guys have made in the past about a particular team that proved to be wrong. Whether you underestimated the team or you overestimated the team, and later realized that might not have been the right call. What changed? What were some of the factors that you revisited, if there was such a case?
So on my side, there's so many bad decisions that I can't remember them all. But some recent examples, so some recent data points is because we invest very early too. Sometimes we invest in companies that are sort of accelerator stage, but they look so good. We lean in earlier than accelerators. And during the height of the pandemic, again, because there's so much money pouring in from, Series A investors now investing at seed, and seed investors now going pre-seed, and so everybody's now going to each other's turf when it comes to investment stage. So with all of this pressure, we're trying to find good founders quickly, and so one of our recent regrets is that we've invested in founders who had excellent pedigrees, right? They had come from good schools, great technology background, great engineers, and they have a concept that sounds like it's going to work out well, and but it quite didn't pan out. So what we are shying away from is teams without a product yet. So even if it's a product that doesn't quite pan out to be successful, I think having a product that has some market proof is important for us now. Like even if that's not the product that you later become the big company that builds the company out of that product, just showing that you can demonstrate, what it's become cliche, product market fit. So being able to be a team that proves that is important, even if that product is not the ending product for the company. Sure. Yeah. So just, we're shying away from just great teams with just good pedigrees. Yeah.
Makes sense.
Yeah.
How about you, Bernard?
Yeah, I could tell a story. So we were lucky in the fact that I would say out of the 400 plus investments we've done so far, these past 10 years, we had one sort of psychotic founder. And so the person was like a great hustler, great talker, initially did lead a pretty good sort of, I would say, like beta product. So we came in at the seed. We actually brought our co-lead was Google Ventures, and then all of a sudden all these other people came in, like NEA, it's like Lair Hippo, a bunch of like Box, I forgot. There's like, anyways, there's like a lot of strong firms from Silicon Valley and New York. So we all came in, and then we just found out that he was lying about a lot of things later on in terms of the numbers, right? So he was a good pitch person, but then anyways, it was a certain situation where we got a hold of the numbers and then the bank accounts, and everything was distorted, right? And then we gave an offer. I mean, just go a little more detail. We gave an offer for a recap, but it's up to the founder to take it or not. And we actually got the funding for them to make it to the next stage. He refused, and he hustled his way to raising them. This guy is a hustler, like. But the thing is interesting is that, we're a young firm at that time, so I wouldn't say we're not top tier, but let's say the top tier. He went around like top tier firms. They all like obviously did easy reference checks. Everyone passed. Second tier passed. He went to like third tier passed. But there's all these dumb money somewhere in the market, and he raised like the fourth tier. It was like probably like outskirts in like Idaho or something. He raised the money, survived another year, and then they like shut down. But that was definitely luckily it was early in our life cycle for one of our funds, where they were like, oh man, we have to like try to like go deep as possible on like this person structure. Because later we also did a little bit of legal due diligence on the structure. We found out he actually had a side vehicle too. Anyways, so it was like just these like shady things that came about. So then we became way more cautious, even if it's like a hot deal in Silicon Valley, like 3 weeks, we'll still like try to do as much as possible in that short time. So
yeah, due diligence is becoming more important.
For sure.
Yeah.
For sure. That's a crazy founder story, by the way.
Oh,
It's
yeah,
wild.
the details are worse. I'll tell you later.
So, based on the battle scars, your experience, you avoid all the red flags. You look for the right proof points with the team, the product, everything else you look at, and then you decide, let's go. You partner with a founder. I'm curious, where do you guys get most excited spending time with and working alongside these founders once you make that decision to invest?
I prepared answers for this. So
Sure. So it sounds good.
I got my cheat sheet.
I feel like I should have prepared.
So, as a firm, we kind of have a triage strategy. So we have companies that are now doing really well, right? And they've graduated from us. They don't really need our help. You know, they got the SoftBanks and the big brothers helping them through their growth stages, the White Star Capitals and so on. So those we don't worry that much, but they do call us on occasion when they have to make important decisions because we were there from the beginning, and so they treat us like family because we're not on the other side of the table. We are standing with them on their side of the table. So those companies are pretty much in auto cruise. You know, and some of them are unicorns, some of them are on their way to become unicorns. Then on the other extreme are the companies who are not doing well and they are very hard to rescue. Like it's just like you know, it's unfortunately there's not much we can do, and or the company has already died or is on the way to the cemetery. So those we cannot do much. But then it's the companies in the middle, the ones that are hustling, the ones that are trying to survive and make it. That's where we spend the bulk of our time. So those companies that are hanging in there, and then within our team, we kind of work in the different part of even that middle spectrum. Like some of our team members like to work with companies that are on, you know, helping to get that next seed check, right? So helping them with that next fundraise. And there's some that like helping companies that are in Series A trying to get their Series B check. I personally like to help our companies that are in Series B. So they are now at around $100 million in valuation. And they're trying to crack it into the unicorn sphere, right? So I like working with them because they're more mature. They have a lot of more battle scars, and I like to help them strategize with most of our value add is with fundraising, helping our startups fundraise. So the next stages. So that's where we spend most of our time with our founders.
Okay, that was a very holistic list. There's a lot of stuff in there.
Yeah.
Anything you would add, Bernard?
I mean, I personally, I guess, like to help out on the product side, and some of our partners do because they've, you know, we're on the product side for their own startups. So we'll, depending on the product, we'll sit down with them and go through their sort of KPIs and even like their design and give them feedback on that. And then, like a lot of, like John said, we help out in fundraising. I think we've become very good at that in terms of our portfolio and results. And then just a lot of things like biz dev to HR to interviewing for execs. And I think that's where we really excelled. And there's a complement on the accelerator side along with our VC funds. Because we do a lot of handholding on the accelerator side, I think it all sort of increased our reputation among founders. So even on our accelerator, even though we have become like I would say a mini Y Combinator in Asia. So if you think of a lot of accelerators, even the US or elsewhere, if you're not YC, you know, you're usually at the seed stage. We have a fair amount of companies that have applied and gone through a program that raised like 5, 10, 30 million. Even in Taiwan, which is a younger accelerator program, the the last class, they had a company that raised 20 million that still wanted to be part of the SparkLabs network. So I think that's where we built a reputation. Even though our accelerator side, we only invest 100,000, we get companies that don't need our 100K. They just want to be part of the SparkLabs network or maybe work with a specific partner. So
That's great. Thank you for sharing both thoughts. Moving into our last section, I just want to ask you guys a few more questions on your general observations with founders on the other side of the table. Because we all have experience working with Korean / Korean American founders, both abroad and here, what are some general observations that you guys make when you interact with the Korean diaspora of founders, maybe here in the US?
Okay. You want me to go first?
you could go.
So, this is a bit maybe realistic and harsh, and I gave the question some thought. And even though this is not what I like, the reality is that Korean / Korean American founders, we are at a disadvantage. So, I mean, more and more we're getting a lot of Korean supporting funds that are helping just Korean American founders, Korean European founders in general, but there's not a lot of them out there. And when it comes to startups, I feel like we're still a minority. So, and this is a bit of a reality, and I'm saying this with a lot of respect for that community, the Jewish community, for example. It is not made explicit, but there's a very strong network of support for Jewish founders with the Jewish VCs and so on. I don't think we as a immigrant community, we have reached that level yet where we have enough clout and solidarity within ourselves to help each other. And so, I mean, we're all working towards it, and the more founders succeed in this U.S. market and globally, more of that solidarity, and I think we've had similar conversation. More of that solidarity and support is gonna become, natural, flowing. But right now, I do think we're not at that stage yet. So. So we should be realistic that there is a little bit, we do go into the fundraising market with a little bit of a handicap. And that calls for being a little bit, we have to hustle more than the other entrepreneurs because, I think there is a bit of a minority factor there. So we have to hustle harder. And then two, and this is a conversation we had, and it's not specific to Korean founders, but because and this one might sound a little bit self-serving on the VC side, but I think as a Korean / Korean American founder, it's good to go to these VC conversations with a bit of a lowered valuation expectation. Because when you read all these TechCrunch articles that are saying, oh, this company raised $100 million, $20 million, the initial kind of reaction is, oh, I guess I need to raise that much money to be a successful entrepreneur. But the reality is that when the rubber meets the road, that's not the case. And you have to go with a little bit more tempered valuation expectation. Not just because of that minority factor, but because reality is not such the way all these TechCrunch articles display fundraising to be like, because it's only the top deals that get announced in TechCrunch. So having a more reasonable valuation expectation is more important. But then also, as more of us, our entrepreneurs make it, there will be more solidarity that can support maybe later hyped valuations, but we're not there yet. is my realistic assessment.
Excuse me. Bernard, would you agree with that?
I think I disagree. I think I have a very different perspective.
Yeah.
Right. I mean, on a few points, I would say one is I don't see it as like if you're Korean, or I think it goes more into individuals. So if it's like Korean American founders, I would never say expect lower valuation at all, right? I think it really depends on the founder itself and the product that you have. Like perfect example is one company at that, it's now called MBX, but it's called MimiBox. It went through our first accelerator batch in Korea, December 2012. A year later, they were the first Korean startup in Y Combinator ever accepted. And also from their performance, they became top 3 YC company. So I remember when they were like, when they went through the program of Y Combinator, and you know, I was talking with Dino, the founder. At that time, I can say now because it's such a long time ago. Like Sam Altman was coaching them because I realized that's what YC does on the top tier of their companies. He's like, "Oh, you got to go pre of 40, right?" At that time, at this time, this is like 10 years ago. It's outrageous. And I'm like, dude, that's bad advice. Like, you know, don't go pre of 40. Like, be more reasonable. He went pre of 40. Eventually, when they raised their Series A, it was lower. But I mean, he just performed well. The numbers worked out, right? So they became, you know, top tier valuation in all of Silicon Valley, right? And we've seen that with some of our other companies. So I think it really depends on individuals. So going to individual traits, though, because on the accelerator side, even though I'm in Silicon Valley, I go to Korea just 3-4 times a year. Especially the first several years, I was very involved, hands-on, in mentoring a lot of the startups. And one thing I will say is Korean culture versus American culture, right? In Silicon Valley, I would generalize and say, if you're an engineering CEO and founder, you know, you'll see them fumble through sort of sometimes pitches, it'll be awkward, or they're not aggressive enough, right? And so in Korea, initially we called it the double whammy. If you're a Korean founding engineer, right? Because when our program is it's structured, we match them with like 4 to 6 mentors. A lot of them are like successful either entrepreneurs or execs in Silicon Valley. And when we match them, they'll email them once and they'll be like, "Hey, did you follow up?" They're like, "Oh no, I think he's super busy. He's not replying." I was like, no, they volunteered to mentor you. You have to be aggressive. Everyone's busy, right? But we had to handle a lot of these people. And that's what we realized, especially if you're Korean, because it's like you're less aggressive, I would say, generalizing. And then if you're an engineer, you have a more, I would generalizing again, a passive sort of personality. The ones that were, I would say, even if they're Korean, but they're non-engineers, the founders that we've seen in our program, they're actually just as aggressive as some people in the US, right? Maybe sometimes even more. They're like, "Oh, you know, like they want to like go through everything, go through brick walls," and we're like, "No, you guys aren't ready." I have actually a funny side story. Like one of our founders, he's like, "Oh yeah, I'm ready to go to the U.S." They're like, "No, you're not ready to go to the U.S." He's like, "I'm coming." I'm like, "Fine, come." He comes here for like 2 months. I'm like, "Okay." I meet him at the beginning. 2 months later, at the end, I'm like, "Hey, how did it go these 2 months?" He's just like, "Oh, we're not ready." So I think it goes down to, I think, just more individuals, and it is the sort of cultural influence of Korean culture being a little more passive, but then you could coach them through that too. That's something that we learned that you can. You know, you just have to say, or you could be sort of more mechanical about it, like, "Hey, email that person like 5-10 times until they reply, and then you schedule a call." Right? Don't ever be, you know, feeling sort of apologetic or that that you're taking away time from them. If they volunteered, you have to take advantage of that. So.
Interesting take, yet again. 2 very different thoughts, and I can certainly appreciate both angles here. Specifically for you, Bernard, because you work with so many early stage founders, I'm assuming a lot of them at the same time. Do you notice a difference between repeat founders versus first-time founders? Do you get to work with a lot of repeat founders that come through your program?
We do. There's a decent amount of repeat founders. For the most part, I would say they've learned from their successes and failures in the past. right? And that's also one reason why, not just us, in Silicon Valley, if it's a concept at a napkin stage, most investors will back that, especially if it was a successful company, because they already went through it, right? Unless maybe there's some other like background that is a red flag. That's where, you know, you could almost say like, yeah, us as investors, we're sometimes lazy, right? Because you see so many companies, but you come across a repeat founder that was successful, then you're like, oh, okay, I'll back them at the concept stage or at the very early stage. And then for the most part, they have learned from their mistakes, right? And then they feel like they could do it better and faster, right? For the most part. So you definitely see a difference because rarely, I think you'll see a founder that has as much confidence as a repeat founder that has gone through the ropes before.
So experience sounds like a bit of heuristics and the confidence as three key points that repeat founders can bring to the table.
Yep.
John, for you, the same question applies. If you could absorb something, take something out of a repeat founder's brain and implant that into a first-time founder's brain across your portfolio, is there a particular skill set, experience, anything else besides what Bernard already talked about that you would choose here?
So, yeah, definitely the experience that you gain from being a already successful founder is priceless, right? And so we have invested in some repeat founders, and most of the outcomes so far have been good. So we do like repeat founders in general. And I think what repeat founders have to the advantage is that learning from all their previous mistakes, right? And so in general, we encourage our first-time founders to be patient with themselves. One thing that I think also Korean founders have against them is I find them being cruel to themselves, right? And because of that, sometimes we have founders that refuse to die, right? They feel responsible to investors, and they don't want to give up until the end because they feel responsibility towards investors, employees, and so on. And sometimes you need to learn to accept mistakes and to learn from them and just pick yourself up and move on. And so I think that's what repeat founders have, the ability to learn from their mistakes fast.
Incredible. I think that's everything I've prepared on my side, and I think we're actually right on time. So I'll just ask one final question for closing remarks. There may be people in the audience who are thinking about pursuing a path in VC, people thinking about becoming a founder, or maybe there are people who are already founders or younger VCs, experienced VCs in the room today. What kind of professional advice or guidance would you like to close today's Q&A discussion with?
You must have a prepared answer.
No. It's not that fancy.
This is the only one I can't do off the cuff.
Not fancy.
I have to think about it, so you could give it since you have a prepared answer.
I mean, it's nothing fancy. So, but I think it's related to the answer before, and it's just whatever it is, just start and get going, and it's. I believe in starting and failing and learning from that failure and trying another one than just staying still and weighing for too long. So there's a Korean saying, 시작이 반이다, right? So I do really believe if you have this entrepreneurial passion, start something. And maybe financially you cannot afford yet to quit your job, and it's okay to start it as a side hustle initially, and based on the early data that you have, if it starts taking off, then you can consider seeking investment, you can consider going at it full time and so on. So don't be afraid to start and fail many times. Yeah.
That's great.
Yeah, I think I'll just narrow the advice if you're thinking about a company or doing a startup is, one, I would find a good co-founder, right? Take some time in doing that because, I think statistics bear out a single founder to two founders, the success rate exponentially jumps. So I would take your time in finding that right co-founder. And second, I would just say, yeah, just start like John said. I mean, it could, ideally, if you could get obviously initials, sort of angel funding and start it, but there are also successful companies like MyFitnessPal. I don't know if you know, there's two Korean American brothers. They're like in consulting. They did it on the side for like 6, 7 years, and they built it to a point where then they felt like they could get outside capital, which they did, and they sold it for like 495 million, right, to Under Armour. So I think it's, if you have an idea, just start it. So
Fantastic. Well, gentlemen, it has been an absolute treat sharing the stage with you today. Thank you for entertaining all of my questions, and I'll open up the stage for audience questions, if that's okay.
Hi, my name is Young. So I'm a founder, and we're able to raise some money. In my particular tech space, I haven't run into another Korean founder or CEO or anything. And we're able to raise some money now. We're getting to the point where we're looking to raise some bigger money. And again, like in our tech space, I haven't ran into, as far as I know, I haven't ran into any of the Koreans. Someone had told me this, that we might run into some obstacles because of this. We certainly don't want to believe that, but I think it's a harsh reality. How do we overcome those hurdles now? Mm-hmm. Oddly enough, most of the people in my space are Jewish. I don't know. We're supposed to ingratiate ourselves to them. I don't know. How do we get over that hurdle if it's the case?
Yeah, most people are Jewish.
To either of you.
Jewish are in the space, in the industry that you work in?
Yeah, maybe I should just drop the Jewish part. There's just no Koreans no Korean founders as far as I've seen. And again, we were able to raise money thus far.
Yeah, and I do want to, while I still hold on to my views, I do agree that this is not always the case. So it's probably kind of based on my earlier comments about the Korean disadvantage. And yeah, I do think it's and maybe because we invest in a lot of Korean American founders here in the States, maybe I see it more. So I maybe have a little more pessimistic view than Bernard. But as I said, we just need to hustle more, meet more VCs than the average entrepreneur. Because the more you go to bat, the better the chances of hitting a home run or getting to first base, second base. So we just have to hustle harder, and I would seek also a lot of advice from entrepreneurs that have seen the same situation, struggles or discriminations, how they've overcome them, and then also from VCs who who are Korean too. But I mean, maybe I'm overemphasizing this kind of situation, and it's not true. But yeah, it's through just hustle and seeking support from other people and seeking those. But I do think that people help you, right? And whether it's Koreans or non-Koreans, just seeking a lot of help, introductions, put in a good word for me, referrals, those just help in general.
I also was just curious, why do you feel like there is this disadvantage or a hurdle because there are no other Korean founders in your space? Is it because of the lack of network, perhaps, or industry affiliations? I'm just curious to better understand the question so I could share my thoughts as well.
Sure. I actually wouldn't have articulated it until he mentioned it today, be truthful. I know you guys, one of you guys said you're from the Columbia ecosystem. So we came from the Columbia ecosystem, both the business school and the engineering school. And we, I mean, if you walk there, all you see are Asians, right? You go to those departments and it's just chock full of Asians. And so, and yet, you know, we were actually seeing it even other. So we're in tech, but a part of a tech, but other parts of tech at Columbia, we've seen them get financing, but certainly not nearly as much as other non-Koreans. And I just said this is a coincidence. But then he brought it up today, and he said, "Oh, maybe it's not a coincidence," you know. So yeah, I think you probably put a block for me now. You know, now I'm gonna, you know, now it's like a psychological.
Sorry,
No,
sorry
it's
to
okay.
mess you up.
No, but I agree with the hustle. I mean, when we think
Yeah.
about how we won money from like Colombia, it was just hustling, right? But I'm wondering how much further that's going to get us if such a thing actually does exist. Or are we going to get the valuations that we see other companies who are doing something similar to us are getting? I don't know.
I think you're already behind the eight ball if you actually think like that. I don't think you should let that into your thinking at all, right? I mean, if you look at Silicon Valley, I mean, maybe New York's a little different makeup, but like even from the 90s, like a third of the founders were like, actually probably 40% of the founders were either South Indian or Chinese, right? It's probably almost still the same. So it's not like discrimination against Asians. Maybe there's affinity if you're an Indian VC that you'll back another Indian founder. Sure, that might happen, but I don't think it's like anything explicitly, at least from my viewpoint, of anything like anti-Korean, right? So I've seen a fair amount of successful founders in Silicon Valley that are Korean that have done very well. I think it's just a matter of, again, product numbers. Are you yourself able to pitch well and know the background of the VCs that you're targeting, right? Because that's what I see generally across the board of some founders. They just don't do their research in terms of who they're pitching to.
I mean, yes, and I guess my point is being a little self-aware that there are these limitations. Maybe, it's like I've heard, for example, and I cannot experience it as well as them, but female founders have a much more difficulty fundraising than male founders.
Sure.
And, African American founders definitely have much more difficulty raising than Caucasian founders. This is a reality of the market. And what I'm saying is that, yes, we might not be as extreme as the African American or Hispanic founder, but from my experience helping, Korean American founders, I've seen that difference in the response.
Okay, I mean, it's fair. I mean, I haven't seen it, right? I think it's more on a individual level.
And maybe, my glasses might be tainted by my own experiences.
Yeah. So.
Thank you. I'm more confused than ever. I'm joking.
I just wanted to understand like the context of, your team and your co-founders. So I work with a person closely who's Jewish, and we met a long time ago, and we used to work in the hedge fund industry. We don't think in terms of, oh, he's Jewish and I'm Korean. It's just we just got together and we're working together. So as you build out your team, like what does it even mean to be a Korean American? Like, isn't it like you build your team and there's some Jewish guys or girls or whatever, and isn't that how a VC would look at it? Like when you say it's a Korean American founder, like to what extent does that or should that impede you when you have your team and it's a mix of people? Like I'm trying to understand.
And I'm sorry I brought
within the U.S. context
this whole race thing into the conversation. I definitely believe and love diversity in the teams, and in fact, if all things being equal, you give me a startup that's just 100% Koreans and there's more diverse mix startup, all things being equal, I would choose the more diverse, global perspective, globally minded startup. So yeah, I don't think the goal is not to create a startup just with Koreans, right? So my comments were more on hey, if you start as a Korean founder and you're fundraising out there, Yeah, maybe I shouldn't even have brought this up. But
No, it's
John,
good.
I'm
You
gonna
throw
come
it
to your
out there.
defense.
yeah, but
Come on, stick to your
but
stick to your position.
but
Dude, don't be a weak founder.
but I think it's healthy to be aware that there are this, kind of obstacles in the market, and that we need to hustle harder than the average entrepreneur out there.
First off, I'll say that at least for me and the rest of my team, the investment decision is equally qualitative as well as it's quantitative. So the qualitative piece will always be influenced by heuristics. Heuristics based on our experience, our background, our previous judgments, whatever it is, right? And I think affinity is certainly a big part there for everyone, not just Koreans, not just Americans, not just white people, black people, but for everyone, right? So at the end of the day, I think there is some cognitive bias, whether it's subtle or not, whether it's explicit or not, that does take place in that qualitative piece of how investors think about, is this the person I want to work with for the next 10 years? With that said, there are obvious research results that say there are disadvantages to female founders and minority founders in the US specifically. But because now the industry recognizes this much more so explicitly than 15, 20 years ago, there are specific funds and managers who are dedicated to fixing this potential problem too. For female founders, there are funds like Female Founders Fund. For African American funds, there's companies like Harlem Capital. And for Korean American founders, there are firms like Strong Ventures. So I think there is a movement. I'm serious. I'm not trying to.
Great plug. Such a great plug.
Okay, I should leave now.
No, please don't. But my point is, based on my experience with my team again, just to give you a better sense, White Star Capital has 47 team members today. On average, we speak 3 different languages. Every person on my team holds at least multiple passports. When my team member think about Koreans or Korean Americans, I'm the only Korean on the team, by the way, we like to index on what is the superpower of a Korean person? What superpower does a Korean heritage bring to the table? And likewise, we apply the same thinking to every different heritage that is represented by our team members. So what I would like to encourage everyone in this audience is, of course, be aware of what potential challenges there may be because of the Korean heritage that we carry or reflect, but also be explicitly aware and tune in to the superpowers that the Korean heritage empowers us with too.
Okay, it's a totally different approach because. Oh, okay. Also your origins. You guys started in London, right?
Not true.
No, where was
US.
it? Montreal.
Well, 3 equal offices in London, New York, and Montreal.
I see.
Yeah.
But bulk of activity was London and Montreal initially, right?
Still untrue. It was actually
Really?
New York.
It was actually New York.
Yes.
Most of your investments. Okay. Well, just because I knew some of the partners that worked there before Eddie joined, so that's why I just got that perception. So, but for us, I would say I don't think we even think about like what superpower, a raise comes in. That never, zero, ever. We've done 400 investments. I don't think, maybe we're not sophisticated or something, but we just don't think about it in that terms of, oh, this is a Korean founder. And we see companies across the globe. Even Korea, our accelerator itself, we get 30% of the applications are outside of Korea, right? Because it's such a well-known program now. US startups, China, UK, Italy, and we've had now like graduates from like 30 different countries, right? Besides Korea. So I would say when we see a founding team, we just look at the individuals, the product, and the team. I don't think we've ever thought of like cultural sort of background and what person that brings. And just going to your first question of composure, the core founders of SparkLabs now, it is 4 Korean or Korean Americans, right? And then we have this guy, Jay McCarthy. He's American based in Singapore. And then Aussie Brit, Frank Meehan, based in London. So that's our core. And again, it was never like specifically, oh, we should be diverse in this way. It was initially 3 Korean or Korean American co-founders because the first entity was SparkLabs Korea, the accelerator there. But then we expanded to Taiwan, US, Australia, et cetera. So that's how it just came about. So.
All right. First of all, very much appreciate Bernard, John. This is great dynamics. You guys have planned it out well. The unplanned part and the planned part And Eddie, awesome moderating. So, two-part question. I guess the first thing is sort of a take on what we've been talking about, but is there an advantage to being Korean or Korean American doing like cross-border operations? Are there things to take advantage of as a Korean? And the second thing is I'm in the Web3 space, so we make mobile games for the Web3 space. And I know you guys have all seen the FTX and the whole fiasco there. And I sort of wanted to ask for your take on, like, is the Web3 space the same as the previous Web2 space, or is it as in how the investments are made and how you see the industry, especially with all FTX?
I'm happy to go first on this one.
Yeah, so sure.
So I think there were a few different questions there. I'll try to tackle them in sequences to the best of my abilities. For Web3 specifically, I do think it is a very different industry compared to Web2. And White Star Capital, by the way, has two very distinct teams, one that's purely focused on investing in Web2 companies and one dedicated to Web3. So the way we think about it is because the Web3 space continues to move and evolve so quickly, it forces the team there to be very open-minded, to be open-eyed and open-eared in terms of the way we absorb information and learn from founders as we evolve our thesis and what makes a great investment, what companies really can create long-term value as well. On the Web2 side, I would argue that the technology industry has matured and has become so sophisticated over the last 5 decades that many investors coming from both public and private market backgrounds have a pretty good framework to think about what can a company look like? What should a company look like at seed stage, Series A stage, leading all the way to pre-IPO and then potentially going public afterwards? So I do think there is a more consensus-driven approach and a well-understood approach to how people invest or partner with founders in Web2. And in Web3, as you probably very well know, it's still very much the wild, wild west. Everyone is learning.
Hence the question.
Sorry, I do want to make sure that I answer the second or third part of the question too. Can you remind me?
The advantage of, I guess, cross-border operations between Korea and the U.S. Are there such advantages that we can take advantage of as?
Yes.
I think sort of explained it as in we have Korean superpower. I know Bernard says, it's not superpowers.
Yeah.
I believe in K superpowers.
So here's where I'm going to try my best to contextualize and quantify this. On one hand, I do think Korean retail investors are extremely active, much more so than an average US retail investor. That's just a gut instinct I had growing up and seeing some of my family members and friends invest in stocks. Now, if I look at the public equities market in the US and Korea, for example, there's a very specific metric that we can look at. In the industry, it's called share turnover. How many shares turn over per a given time period? And if you look at that across US stock exchanges like the New York Stock Exchange, NASDAQ, compare that to KOSPI and KOSDAQ, it proves numerically that Korean retail investors are much more active than US investors or US counterparts are. Now, if you look at the retail participation of Korean public equities market, it is on a ratio basis much higher than what US retail investors do on average as well. So these are not exclusive and exhaustive points that prove what I'm trying to say, but I'm saying there are proof points or at least signal points that we could look at to determine whether some certain superpowers are evident or at least growing in the right direction, right? The reason why I pick on this retail participation of Korean investors specifically is because it ties back to crypto. When I think about the retail participation and adoption of crypto in Korea, it's ridiculous. It's crazy to think about the level of crypto adoption and penetration that took place in Korea in a very short period of time. Now, pair that with the fact that most of the Web3 innovation, new smart contracts, new applications, new protocols, new layer ones, all of that is majority basis coming out of the US, right? So a lot of that innovation takes time for it to migrate over to South Korea, to become properly localized, to have Korean founders also adopt that thinking too. And regardless of all of that time lag, the retail adoption of crypto in many ways trumps what we see in the US.
Well, I think the origins actually came from the 90s and Hancoin. Right?
Fair
So
enough.
a lot of the innovations that you see in the US, I mean, from the 90s was actually from Korea. Actually, I wrote an article that was like, had like whatever, 20,000 views. You could read it. It's like, why is Korea crypto crazy? I wrote it in VentureBeat. But going to your part about sort of this advantage of Korea, I could give a specific example, is just a talent, right, in certain industries, right, whether it's crypto or gaming. I would say Korea, when we look at Korean startups, we say that they are Korean founders, world-class engineering, and also world-class design talent, right? What they lack is maybe like top management level. So great example is my co-founder, Jimmy, that I mentioned before at SparkLabs. He was first CFO of Nexon. And then he took out a team and he had a dev team there, but he actually found a US product head, married that, started a company called Studio X, and then Disney bought it. Right? So there's certain things that you could do. Disney bought it also partly because of the Korea gaming industry. They're far advanced, especially at that time when they acquired it, in terms of the server farms technology. Right? So there's advantages that you could find.
So you do believe in K superpowers after all?
No, there's advantages of talent, right? It's not cultural.
Okay. I'll just add my last comments, because I do have. So in the long run, we believe in crypto, Web3, and all of that. And we were involved from way early on. 2013, we invested in Corbit, which was the first. Back then, it was just Bitcoin exchange. So we have a long-term belief that crypto, Web3 will do well, but in the short term, I am a pessimist on this one too, and I think the industry needs even more cleanup. And to counter a little bit on the observation of Korean retail investors, Koreans, I think, consider the stock market and crypto as a casino. So there's a lot of speculative investing that's going on, and these altcoins or SHIT coins, many of them are just going up in value because of speculative investment and not because of the core value that coin brings. So I think even though our fund is actually suffering also a little bit from the FTX exposure indirectly, I think that the industry needs much more cleanup, and this decentralization that the industry is preaching is not a reality today. A lot of these coins are super centralized by the founders and investors behind those coins. And so I think even though we are involved in the industry, we expect more cleanup and purging. And then in terms of superpowers, I am with you on that, and in the sense that this Hallyu wave, the K-pop wave, and so on, I don't think it's only with Korean content, dramas, films, and music, but there's a new trend of Korean products that are hitting the global markets. One of our sponsors here, Maku, for example, they bring makgeolli and Korean alcohol to the world. We just invested in a kimchi startup. We think that this is kimchi, by the way, it's a $6 billion industry, so globally, and less than 3 is from Korea. So this Hallyu wave is going to grow, and I do believe that key players in making this Korean wave go global is going to be the Korean diaspora outside Korea. Because Koreans in Korea by themselves, I don't think can do it alone, because there's that cultural, language, business barrier. So I do think it's a time for Koreans globally to ride this Hallyu wave in every aspect and industry. So, since it's Korea society.
And with that, I think we're done for today, and maybe we can move on to the open-ended networking session.
Thank
Thank you again, Bernard and John.
Thanks.